Welcome back. You're watching The Money Show, and it's time to look at our viewer portfolio queries. I have with me Shweta Rajani. And Shweta, let's take our first viewer's question. And this is from Sarat. And I'll just read out the question to you. I think you too have the details. So he's been watching our show since a very long time. Thank you so much, Sarat. And he is just 26 years old. And I really have to appreciate the kind, the way he has designed his entire portfolio. So he says that 14% of his salary goes into NPS, where he's investing aggressively in equity. And he says that large cap exposure through NPS is covered for him. Apart from that, he's investing in a few funds, which is UTI Nifty 200 Momentum 30 Index, Kotak Nifty Alpha 50, Motilal Oswal Mid Cap Fund, Nippon India Multi Cap, Nippon India Small Cap. He's got Quant Small Cap also. Now he wants to know that are there any suggestion or changes you might want to suggest as far as his money allocation in each fund is concerned. And he is concerned about UTI Nifty 200 Momentum 30 Index, where he could see a lot of sell recommendations coming. So so should he stop contributing, or just let the money be and not redeem it right now? But should he continue investing in that fund is a bigger question. And the same is with Kotak Nifty Alpha 50 also. So great question, Sarat. And looking at the way you send your questions, we really understand that you read the market, you understand the market. There is volatility in the market, which is why you must be seeing a lot of deviation in terms of your performance and return as far as these two funds that you've highlighted, in terms of performance is concerned. But Shweta, how would you like to elaborate on this?
Yes, Sarat, firstly, I want to congratulate you. Given your age and the way you are very clear in terms of what your goals are, how do you want to strategize your portfolio and achieve it, that is phenomenal. Now, coming to, first, your overall goal, I would suggest you are doing an SIP. It's good. Scale up your SIP every year wherever you can. Specifically addressing your question on the two schemes. See, both Momentum and the Alpha strategy. Here again, what Momentum does now is Momentum is an index, a passive index, which is creating a basket of stocks which would have done phenomenally well in the last 6 months in terms of return. So there is some momentum in those stocks, and that's how the index is created. Again, like I was explaining in the previous session, that what the problem is, for 6 months these indexes don't change the underlying portfolio, and given that right now the market is changing, you would need more active management for the portfolio. So you should avoid both these index funds that you have, the theme based index funds that you have in your portfolio, because over a longer time period, what happens is these are theme based. If you don't exit your timing correctly, you would miss out on the returns. Rather, leave it to a fund manager who's doing this full time, deciding which sectors and which stocks you have to invest according to the market dynamics. And that would do a better job for you. So that's my recommendation. Exit and stop your SIPs in these two funds that you have. Also, one more recommendation that I have is you have a lot of mid and small cap portfolio, portion of your portfolio being towards these two segments. So exit from the Quant small cap fund. You have Nippon Multi, you have Nippon Small, which is good enough, but there's also some AMC concentration towards Nippon. So some additions that you should consider doing in your portfolio is add an ICICI Pru Focus Equity, add a DSP Equity Opportunities, and add a HDFC Flexi Cap for your mutual fund basket. Yes, you mentioned you have an NPS, so you have a large cap allocation, but overall maintaining a 60% or small, 60 odd percent large cap in the portfolio is absolutely fine.
All right. Let's move on to Bala's question, and this is from Coimbatore, Shweta. Portfolio is of 2.5 lakhs, currently investing in UTI Nifty 50, DSP Nifty 50, Nifty Next 50, Edelweiss Flexi Cap, Motilal Oswal Mid Cap, Tata Small Cap, Motilal Oswal S&P US Equity, Motilal Oswal Multi Cap also. He wants to continue investing for 17 years and wants to accumulate almost 3 CR. And what should be the ideal investment amount is what is he trying to know. And should he also be adding large cap or large and mid cap in his portfolio? Yeah, that's what Bala wants to know.
So Bala, I went through your portfolio and I did some math here. For the 3 crore goal that you have over the next 17 years, what you would need to do is you'll have to step up your SIP by at least 10% every year. If you can do that, then you'll comfortably achieve your goal looking at how the long-term equity markets have behaved. Coming to the portfolio, we need to bring in some more efficiency. So I would suggest exit and stop your SIP in the index funds that you have. You have a Nifty 50, a Next 50, as well as an S&P index fund. What we have seen is an actively managed fund can easily give you 2 to 3% per annum more than what an index would deliver. And 3% on the face of it may look like a smaller number, but if you compound it over a 10-year period, let's say this was 10 lakhs, just 3% means an additional 10 lakh coming to you just because of this 3%. So be in the active space. That's one recommendation. The other recommendation I have is to exit from the Motilal multi-cap fund. You're right. You need to balance out your market cap allocation. So 55 to 60 large and the residual mid small, given that we also have a 10-year horizon, would be a good combination. So to that aspect, some recommendation for you: add a quant large cap, a Canara Robeco multi cap, and an ICICI Pru large and mid cap fund to your portfolio.
Shweta, let's take Dr. Mudasir's question. He says that he's 40 years old, sending this question by email from Delhi. And he's got Parag Parikh Flexi Cap, Quant Flexi Cap, Motilal Oswal Mid Cap, Motilal ELSS and Small Cap. Total SIP he's putting is almost 2,25,000. Goal is to accumulate 10 CR in 10 to 12 years. So how is the portfolio allocation in terms of funds and investment amount, and should he be stepping up his investments?
Yes, Dr. Mudasir. To achieve your goal of around 10 CR, you would need to do a 5% of step up to your SIP, at least, to comfortably get to your goal. Coming to the portfolio, I would say, the portfolio is fairly okay, but there is a AMC concentration. You have invested, most of the portfolio in a single AMC. So here, I would say, bring down your allocation to the Motilal Small Cap Fund. I also saw you have an ELSS scheme. I would suggest you reconsider which tax regime you want to be in. Post the budget, which tax regime works for you. If you go in for a new tax regime, then you don't need to park your money in ELSS and lock that money for the next 3 years. You can rather be in a better category, which has, a better return potential. So stop your SIP in Motilal ELSS. And the other scheme is Quant Flexi Cap, where I would suggest you stop your SIP. Instead, what you can do is add an ICICI Pru dividend yield to the portfolio, a Kotak multi-cap, SBI Contra, DSP equity opportunities, and Investco small cap. That will help you diversify across different styles and asset management companies.
All right, I think this also brings us to the end of the show. Shweta, thank you so much for taking your time out and helping our viewers with their financial portfolio queries today. And for our viewers, I'm going to leave you with our WhatsApp number and email ID. You can send across your questions. But when you send across your questions, please make sure that you give us all details as to what is your investment strategy like, what kind of funds you invest into, if at all you want any recommendation or suggestion over your insurance policies as well. So we do take insurance related questions also. WhatsApp number and email ID on your screen. Thank you so much for watching. Goodbye.